Lately, electric vehicle stocks have been trying to keep their head above water, and I've been buying them at some really good discounts. So in today's video, I'm going to compare 6 different electric vehicle stocks to help you decide which one to buy. So let's get into it. Hi, my name is Greg and I make videos about options trading and stock market updates. Today I'll be comparing 6 different electric vehicle stocks. I made a video about this a couple months ago and it's been gaining a little bit of traction recently, so I figure you guys would probably want an update. So to break it down for you, for each company, first I'm going to start out by giving you my own thoughts, then we're going to follow that up with a quick price analysis for each individual stock. And finally, if you stick around all the way to the end of this video, I'm going to rank these stocks 1 through 6 so you know which ones to buy. Before we get into the juicy part of this video though, make sure to smash the like button and hit subscribe if you're new to the channel. The first and probably most popular EV stock here on YouTube has to be Workhorse. I've made a ton of videos about Workhorse, more than I can even count on one hand. That's because I think Workhorse is one of the best investments that you can make right now. But there is an issue with Workhorse. As we've all experienced, Workhorse's share price is very dependent on the USPS contract. We first expected the USPS winner to be announced at the end of the fiscal year for the USPS, but obviously that didn't happen. And then Roth Capital started to spread a rumor that it'd be announced on October 13th. When it wasn't announced, Workhorse fell 13% in the following week. Looking at the price charts for Workhorse right now, they're currently trading at $20.30, and I would consider this to be undervalued considering their 180 exponential moving average line, the green line, at $22.71. But if we look closely at their trends, they've been trading between 25 RSI and 45 RSI, so that is not a good sign. This means that they could be rejected by the 30 simple moving average line, currently at 21.15. Looking at the MACD indicator, they're trading below 0, so this is another bearish sign for Workhorse stock. Personally, I would wait to buy in if you want to get the absolute best price for their stock. But again, their share price is heavily dependent on the USPS contract, so if this gets announced this week or this month or any time between now and the end of the year, then Workhorse stock could easily just fly up. If Workhorse doesn't get a majority of this contract like everyone is expecting, then we can expect Workhorse stock to fall by as much as 50% all the way down to around $10. But if they do get most of the contract like a lot of us are assuming, then you could see their stock climb to as high as $36. Next, I want to talk about a related company, Lordstown Motors. Now, Lordstown Motors is sort of a spin-off on Workhorse. And this is because that the CEO of Lordstown Motors was also the founder for Workhorse. And Workhorse owns a 10% stake in Lordstown Motors. And to add to the relationship, Lordstown Motors will also allow for Workhorse to build their trucks inside of their ginormous factory. These two companies are essentially joined at the hip, and this was extremely evident whenever Lordstown Motors showed off their pickup truck at the White House. Funnily enough, Workhorse actually gained more out of this event than Lordstown Motors did. Lordstown Motors gained about 5% on this event, and then they started to sell off once the hype started dying down. Since this event on September 29th, in total their stock is down by almost 33%, so this definitely isn't looking good for them. If we look at the trends, it doesn't look like this is going to stop anytime soon. Just like with Workhorse, they're trading between 24 RSI at the very bottom and 50 RSI at the top. Looking at the MACD, they're still under 0, and they are considered to be undervalued, considering that the 180 exponential moving average line is 22.55. So they're $4 undervalued, but their price is heavily dependent on Workhorse going up. Towards the upside, if we see some good news come out about Lordstown Motors, we could see their stock climb all the way up to $28. But keep in mind, right now it's still headed down. And from one losing stock to another, let's talk about Hyliion. Hyliion has probably been one of the biggest disappointments in the electric vehicle sector as of recently. This was mostly caused by short-term traders who like to buy into the rumor and sell the news. This is exactly what happened with their merger with the Tortoise Acquisition Corporation. Their stock was super overhyped on the change of their ticker symbol, just like Nikola Motors was, and we were all expecting them to surge by as much as 300%. But I think that Nikola Motors is a bad comparison because it was heavily influenced by their con man for a former executive chairman, Trevor Milton. Comparing Trevor to Thomas Healy, Thomas is definitely well underspoken. He doesn't brag about his company every chance he gets, and this might be why their stock has been heading down recently. Looking at the price chart for Hyliion, since their merger, they're down by almost 60%, so this is a huge loss for Hyliion. And if you bought in at the 50s, 40s, and even 30s, you're really hurting right now. If we look at the RSI, it doesn't look like it's getting any better considering that they're trending between 22 RSI and 45 RSI. Just like with Workhorse, just like with Hyliion, they're continuing to trend down. Looking at the MACD indicator, it is starting to be a little bit bullish. We see this blue line creeping up to the 0 mark, but again, they're not quite there yet. That being said, they are super undervalued with the 180 exponential moving average line currently at $30.67. So that means that you're getting this $22 stock for an $8 discount. That is huge. And from one good deal to another, let's talk about Tesla stock. Now, Tesla is definitely the most obvious choice whenever it comes to electric vehicle stock because they have proven themselves to be successful. But the issue with Tesla is that they could be extremely overvalued right now. Currently, they have a market cap of about $400 billion. Long term, obviously, I think that Tesla can grow into this market cap, but as of right now, they haven't fulfilled on all of the promises that they've made about full self-driving and being a big part of the energy sector. We've been promised full self-driving for years now, and the beta for this just came out last week. I think that once the whole Tesla fleet finally gets full self-driving, then Tesla will finally start to grow into its valuation. After just a few quarters of seeing how profitable the robotaxi system is, then I think you'll see Tesla really start to take off in value. Over the last month, Tesla stock has done pretty well. It went from a low of around $366 all the way to $420 as of right now. And they're trading below their 180 exponential moving average line. They recently crossed below this after a report came out on recalls over in China. Now, they disputed this, but their stock is still heading down as of right now. If we look at the RSI, we can see that they're actually consolidating between 35 and around 55. So that is slightly bearish. If we're looking at the MACD, we can confirm this. They are below 0, so this is not a good sign for Tesla. But I do think that they could be going up very soon. Obviously, I don't have a crystal ball and I don't know how quickly Tesla will start to go up, but we do have a general sense on the direction of their stock. And from one stock trending up to another, let's talk about NIO. Now, I've talked about NIO a couple times here on this channel, comparing them to a young Tesla. I'd say this is a pretty fair comparison, but if we look at the price movements of NIO in comparison to young Tesla, one has obviously been more favored than the other. This is likely due to retail and institutional investors alike trying to find the next Tesla stock within the EV community. As of right now, I'd say that NIO is definitely the closest. This is mostly due to the increase that we've seen in NIO's delivery numbers. For the last 2 months, they've reported record deliveries, and over the last quarter, they've delivered as much as 12,000 vehicles. This makes up for almost half of their deliveries for the entire year, so we're just now starting to see that exponential growth, similar to what we saw from a young Tesla. The optimism for NIO right now is probably the most justified among the EV community, and their share price has really started to show that. Out of all the stocks that we've talked about so far, NIO is the only one that's been trending up recently. You can see that they're currently overpriced. Their 180 exponential moving average line is at 24.68, and currently they're trading at 27.15. So this means that they're a few dollars overvalued, but if we look at their RSI, you can see that they're trending in bullish territory between 45 RSI and all the way up to 85 RSI. So there is a bullish sentiment on NIO stock, and people are continuing to buy in more and more. The MACD is showing signs that it's going to pull back some more, considering that the blue line is still headed down, and it could cross below 0. So this might give you an opportunity to buy in around this 180 exponential moving average line. Personally, I'm waiting to buy into NIO stock because I think they're slightly overvalued. But if you're a long-term investor and you're planning to hold these stocks for years, right now is a good time to get in. Another stock with good fundamentals right now would be XPeng. XPeng is another electric vehicle company very similar to that of NIO. The difference with XPeng and NIO right now is that NIO has definitely delivered a lot more vehicles. But XPeng just rolled off their 10,000th P7 off of their assembly line, so this is some pretty big news. XPeng claims that they can produce over 100,000 vehicles every single year at their Zhaoqing plant, so hopefully they can live up to those promises. If we see their production continue to ramp up as it has been, then of course we'll also see their stock follow along with that and trend up as well. Looking at XPeng's price charts, currently they're at $20.17. And it looks like they're trading just around their 180 exponential moving average line, currently at $20.32. Looking at the trends here, it looks like they're consolidating right now between 40 RSI and about 55 RSI. So this is slightly downward, considering that they were super overbought right around here. You can see they hit all the way up at 75 RSI. Looking at the MACD indicator, they are in bearish territory, and the blue line just crossed the yellow line in the downward direction, so that is a sell signal. So we could see this trend down a little bit more, and they might find a support again here around $19.90 as we saw at this point. I'd say that XPeng is a solid investment to make, just like the other 5 companies that I've talked about today. So now that we've covered my thoughts and the price movement on these 6 different companies, let's rank them 1 to 6. Coming in at last place, I'm going to put Lordstown Motors. And this is because they haven't started to produce vehicles yet, and they're not planning to produce any vehicles until the summer of 2021. That's not to say that they're a bad investment to make right now, but they just don't have the solid fundamentals that all the other companies have. You could argue that buying in right now before them producing their first vehicle would give you a discount. So it's definitely worth looking into. Coming in at number 5, XPeng. Again, nothing against this company. They're a great investment, but they just haven't produced as many vehicles as I'd like to see. They need to be able to prove their $15 billion market cap. Number 4, Workhorse. This is based on current production numbers. They claim that they're producing 300 to 400 vehicles by the end of this year. But if they get the USPS contract, they've said that they have the production capacity in order to build 60,000 vehicles a year. Keep in mind that I have about 10% of my entire portfolio locked up into this single company that I'm ranking as number 4. So hopefully that gives you an idea of how well I think of these 6 companies. Coming in at number 3, Hyliion. I think that Hyliion is the best EV truck company to invest in right now. And this is because all the other companies aren't mass producing vehicles yet. So they were the first to make it possible. And it also helps considering that they're super undervalued right now. Coming in at number 2, Tesla. I know, big shocker. You'd think that I would put them in first place, but considering their market cap right now, they have a lot to prove. I think that once they fulfill all their promises on full self-driving and being a big part of the energy sector, then you'll easily see Tesla's valuation climb all the way to $2 trillion. And finally, for the stock that you've all been waiting for, number 1, NIO. I think that NIO is the number 1 right now because they're just now starting to see that exponential growth in terms of their production and their deliveries. If they continue on this trend and take a large part of the Chinese electric vehicle sector, then their 30 billion market cap as of right now would be a joke. This company could be worth as much as Toyota Motors one day, but in order for us to see that growth, they're going to need to expand globally. Right now, short term, I would consider them to be slightly overvalued, so I'm going to be waiting to buy in. And if you want to keep up with what trades, what investments I'm making on a day-to-day basis, I post all of my trades over on my Discord. It's an active free trading group with over 400 members, so if you're looking to make a whole lot of money, you'll get free trade alerts, free watch lists, and best of all, free information in order for you to make some money. So come over and join us. It's the first link in the description. It's pinned in the comments, and again, completely free. Hopefully this video helped you to make the best choice on which electric vehicle stock to buy right now. Comment down below what you're buying. Thanks for tuning in, and as always, remember to stay positive, stay green. I'll catch you in the next one. Bye guys.